Good morning and welcome back to Stormstock Solutions. I'm Grant Mercer. With the opening bell just ahead, let's bring some clarity to the chaos in today's setup. The tone this morning is all about AI, stretched valuations, and a fresh wrinkle on trade policy. According to MarketWatch, we've got a big AI partnership, a major chip validation, and a high-profile tariff lawsuit all hitting the tape before the open. Layer on top a reminder that valuations across the market are getting rich, and it's a day where risk management is going to matter as much as opportunity. Let's start with those key drivers. On the AI front, MarketWatch is highlighting a notable move from Intuit. The stock, which has been the worst performer in the S&P 500 this year, is popping after the company announced a new partnership with Anthropic. That's important because Anthropic is one of the very companies that had sparked investor fears about disruptive AI competition. By teaming up rather than fighting head-on, Intuit is trying to flip the narrative from at risk from AI to enabled by AI. Traders will be watching whether this calms some of the anxiety around incumbents being left behind by newer AI players. In the chip world, there's a big validation story. Reporting from MarketWatch points out that AMD shares are rocketing on a major deal with Meta. Meta is looking to diversify beyond NVIDIA, and this agreement not only gives AMD a big AI customer, but reportedly gives Meta a chance to invest in AMD itself. For the broader market, that reinforces the idea that AI infrastructure demand isn't a one-company story. It spreads the narrative and potentially capital across more of the semiconductor complex. On the macro and policy side, one of the more interesting developments comes from FedEx. As reported by Tommy Kilgore at MarketWatch, FedEx has filed a lawsuit against the Trump administration, seeking refunds on tariffs that were paid. Now, this is about specific tariff refunds, but it also reopens the conversation about trade policy, supply chains, and who ultimately bears the cost of tariffs. If other corporates follow FedEx's lead, we could see a broader pushback that markets interpret as a potential change in how future tariffs might be structured or challenged. Now let's talk about where traders are seeing strength. First, there's a counterintuitive bullish narrative around AI itself. Barbara Kallmeyer at MarketWatch highlights a Jefferies strategy note arguing that what could actually save markets from an AI Armageddon is a populist backlash against AI. The idea is that political and social resistance to aggressive automation could slow the most disruptive scenarios, tempering some of the worst fears about mass job losses and earnings destruction. In other words, some guardrails could end up being bullish for markets by limiting the extreme downside tail risk. Add in the AMD Meta partnership and the Intuit Anthropic deal, and you've got a tape where AI anxiety is being reframed. Traders are watching legacy tech names that lean into partnerships rather than fighting disruption alone. And they're also watching second-tier chip makers that may benefit as big platforms diversify away from single suppliers. This isn't a go-buy AI call, but it is a reminder that the AI theme is broadening beyond just one or two marquee names. On the flip side, there are some clear areas to handle with care this morning. Philip Van Dorn at MarketWatch is out with a piece on 10 stocks that are down at least 20% this year, where analysts expect them to roar back with gains of 46% or more over the next 12 months. Historically, baskets like that are often full of high beta, high controversy names that can be very volatile. Traders might treat these as classic fallen angels, lots of upside if the story turns, but also a reminder that the market doesn't discount a stock by 20% without real questions on the table. Backing up that sense of fragility, Mark Hulbert at MarketWatch notes that 9 of the 10 most watched valuation indicators for the stock market are now in sell territory. That doesn't mean an immediate top, but it does tell you we're operating in a stretched environment. When valuations are this high, markets can stay elevated, but corrections tend to bite harder when they come. That's the backdrop this morning. Upbeat AI headlines running into a wall of expensive multiples. There are also a few under-the-radar stories I'm keeping on the background watch list. Beyond the headline pop, the AMD Meta deal is one to watch over multiple sessions. If we see follow-through in other chip names, it could hint at a broader rotation within the AI hardware trade. In healthcare, MarketWatch is reporting that Novo Nordisk and Eli Lilly shares are under pressure after word of planned price cuts for Ozempic and Wegovy. That's a reminder that the GLP-1 and weight loss trade isn't just about demand, it's also about pricing power and regulatory scrutiny. If price cuts become a trend, investors will be reassessing margins across that whole ecosystem. We're also seeing some personal finance and wealth stories trending, disputes over estates, questions about inheritance tax, that, while not market movers on their own, speak to a broader environment where demographics, wealth transfer, and taxation are in focus. Over time, those themes can influence policy debates and, indirectly, market sentiment towards certain sectors like financials and estate planning services. So, as the bell approaches, the playbook on the professional side looks something like this. Watch how AI-linked names trade on these partnership headlines, see whether semis get a second wind from AMD's news, and keep one eye on that FedEx tariff suit as a possible early signal of broader pushback on trade costs. At the same time, recognize that the broader equity market is priced for a lot of good news, with those valuation indicators deep in sell territory, which makes position sizing and risk control especially important on a day like this. I'll be back with intraday updates once the market is open to see whether the early enthusiasm around AI can overpower those valuation jitters. Remember, this is information and education, not personalized financial advice. As always, I'll be here to keep clarity through the chaos of these markets.